This month, the prospects for the economy are largely in the hands of policymakers. Growth in the US and Europe has come to a virtual standstill over the summer. In the US, fiscal and monetary stimulus should help to get the economy going again. In Europe, concerns keep mounting that policymakers are unable or unwilling to keep the sovereign debt crisis under control. The continuous financial market turmoil has started to affect the real economy as well. Consumer confidence in both the US and Europe has plunged. Whether we are actually in a recession has almost become a question of semantic relevance only. We have revised down our forecasts for GDP growth in most developed economies for both this year and next. In the US, President Obama unveiled a new jobs plan to get the economy going. Tax cuts and spending on infrastructure should give the economy a small but very welcome boost next year. But it remains to be seen whether the jobs plan makes it through Congress. In the meantime, the Federal Reserve is debating further monetary stimulus. Divisions within the Fed run deep, which is why we do not expect the Fed to embark on a major new program this month. We do expect a new round of quantitative easing to be announced later this year, possibly in November. In Europe, the worsened outlook has prompted the ECB to mitigate its hawkish tone. Further rate hikes are definitely off the table this year and next. The ECB may even start to lower rates again. As if slow growth was not enough to worry about, financial markets were shocked by the unexpected resignation of Jürgen Stark, chief economist and executive board member of the ECB, in early September. Stark was a well-known critic of the ECB's program of buying bonds from highly indebted Eurozone countries. And his resignation suggests strongly dissenting views about the role the ECB should play in a crisis. It remains uncertain how the European debt crisis will be resolved, but until politicians agree on a clear and credible solution, fear will dominate European and global financial markets. And that in turn erodes consumer confidence and chokes off the recovery. And this is why now, more than ever, political decisions will shape the economic outlook.